What if three companies could completely replace your traditional bank? Not in 10 years, right now. Today we are breaking down SoFi, NU, and Hood, three fintech disruptors that are turning the banking world upside down, and the numbers might surprise you. Welcome to the Money Mind. I am glad you are here. Today we are doing a deep dive into three of the most talked about fintech stocks on the market: SoFi Technologies, New Holdings, and Robinhood Markets. These are not your average bank stocks. These companies are rewriting the rules of finance, and whether you are a long-term investor or just curious about where money is heading, this one is for you. Let us get into it. Let us start with SoFi Technologies, ticker SoFi. SoFi is trading around $27.14 with a market cap near $21 billion. The 52-week range is pretty wide, from about $10.41 all the way up to $32.73. That tells you right away this is a volatile name. But here's what gets me excited. SoFi just posted its 9th consecutive quarter of GAAP profitability. In Q4 2025, they crossed the $1 billion quarterly revenue mark for the first time ever. Full-year revenue came in strong, and management is guiding for $4.655 billion in adjusted net revenue for 2026. That is roughly 30% year-over-year growth. They are also projecting adjusted earnings per share of 60 cents and EBITDA margins of 34%. Think of SoFi like a Swiss Army knife of finance. They have got personal loans, student loans, home loans, investing, banking, and even a credit card. The SoFi Smart Card launched in late 2025 with 5% cashback for SoFi Plus members. They relaunched crypto trading and are even planning a SoFi-branded stablecoin this year. But the real hidden gem here is Galileo, their technology platform. Galileo is like the AWS of fintech. It powers the back end for other banks and neobanks worldwide, supporting over 128 million accounts. They recently signed major deals with Southwest Airlines and Wyndham Hotels to power their financial products. That is high-margin, recurring B2B revenue that most people overlook. Now, the stock has had a rough start to 2026, down about 39% year-to-date. A big part of that was Muddy Waters taking a short position in March, which spooked some investors. SoFi pushed back hard and may even pursue legal action. On the analyst side, you've got 22 analysts covering the stock. 6 say buy, 11 say hold, 5 say sell. The median target is $27.75, with Needham at $33 and JP Morgan at $31. The forward PE ratio sits around 27, which is not cheap, but for a company growing revenue at 30% with expanding margins, it is not outrageous either. Earnings are coming up on April 29th, so that will be a major catalyst. The bull case here is continued profitability, Galileo expansion, and potential S&P 500 inclusion. The bear case is the short seller pressure and the fact that lending businesses can get hit hard in a recession. Next up, New Holdings, ticker NU. This is Nubank, the largest digital bank in Latin America, and honestly one of the most impressive growth stories in fintech globally. NU is trading around $15 with a market cap of roughly $81 billion. The 52-week range runs from $10.50 to about $19. The PE ratio is around 23, which for a company growing this fast is actually pretty reasonable. Here is the headline number: 131 million customers. They added 17 million net new customers in 2025 alone. Full-year revenue came in at $6.99 billion, up about 27% year-over-year, and earnings hit $2.87 billion, a 45% jump. These are not startup numbers. This is a profitable, scaling machine. Think of Nubank like what would happen if you built a bank from scratch with a smartphone-first approach in a region where traditional banks charge outrageous fees. That is exactly what they did in Brazil, and it worked. They are now the largest credit card issuer in Brazil and serve 15% of Mexico's adult population. The big catalyst for 2026 is their Mexico banking license going fully operational, which opens up payroll portability and high-yield savings. In Colombia, they nearly tripled credit card approval rates. And here's the wild card. In January 2026, they got conditional approval from the OCC to establish a national banking presence in the United States. If that plays out, the addressable market gets significantly bigger. Analysts are overwhelmingly bullish. 15 buy ratings, 3 holds, 0 sells. The median price target is $19, with some analysts seeing higher. For 2026, Wall Street expects earnings per share around 92 cents, which puts the forward PE around 16 to 17. That is very attractive for a company with this growth profile. The bull case is Latin American expansion plus a U.S. entry. The bear case is currency risk. They operate heavily in Brazilian reals, and the fact that emerging market stocks can be more volatile. But the execution here has been nearly flawless. Finally, let us talk about Robinhood Markets, ticker HOOD. Love it or hate it, Robinhood has completely transformed how a generation thinks about investing. HOOD is trading around $73, with a market cap of about $108 billion. The 52-week range is massive, from $39.21 to $153.86. This stock has been on a ride. The PE ratio sits around 37, reflecting the high growth expectations baked into the price. The 2025 numbers were stellar. Annual revenue hit $4.47 billion, up 52% year over year. Net income was $1.88 billion. That is not a company bleeding money anymore. Robinhood is solidly profitable and growing fast. Think of Robinhood as the Netflix of finance. They took something that used to be complicated and expensive, stock trading, and made it simple and free. And now they are expanding into everything. The Robinhood Gold Card is getting real traction. No annual fee, 3% cash back on everything, and early adopters have pushed annual spending past $10 billion. They launched Cortex, an AI-powered assistant for market analysis. The Legend platform gives advanced traders futures, short selling, and near 24/5 options trading. But the biggest swing is crypto and global expansion. Robinhood is pioneering tokenized U.S. stocks and ETFs across 31 European countries. They are building their own blockchain, and with the partnership with BNY to build Trump-linked investment accounts, they are tapping into a massive retail audience. Analyst consensus is solidly bullish. 77% rated a buy. The median price target is $122, with Citizens recently setting a $155 target. Bernstein analysts think it could hit $130 by year-end on crypto and prediction market revenue. The bull case is product diversification, global expansion, and the continued shift of young investors onto the platform. The bear case is regulatory risk around crypto and the fact that trading revenue can be cyclical. If markets go quiet, transaction revenue drops. So let us compare these three. SoFi is the all-in-one financial platform play with a powerful B2B technology business underneath. NU is the emerging market growth story with incredible customer acquisition and a path to the US. And HOOD is the retail trading platform evolving into a full financial super app. If I had to rank them by risk, HOOD is the most volatile with that massive 52-week range. NU carries emerging market and currency risk. SoFi has short seller pressure but also the most diversified revenue streams. By valuation, NU looks the most attractive at roughly 23 times earnings with 27% revenue growth. SoFi is moderately priced at 27 times forward earnings with 30% guided growth. HOOD is the priciest at 37 times earnings, but the 52% revenue growth justifies a premium. All three are profitable. All three are growing revenue north of 25%. All three are expanding beyond their core products. That is rare in fintech. This is not financial advice. Always do your own research before making investment decisions. But these three names are worth watching closely in 2026. If you found this breakdown helpful, hit that subscribe button and drop a comment with which stock you are most bullish on. I read every single comment. I am the money mind. Let us keep building wealth, one smart decision at a time. See you in the next one.